let's start off with Bashar. Let's hear about you. And you've done a lot of things in the region. Let's hear your story and why you're wearing a tie. But and then what you're doing now with the AI compute.
Where do we begin? Why am I wearing a tie?
Move the mic up there. Yeah.
Why am I wearing a tie? Mostly to annoy you.
No, I love it.
Where do we begin? I started my career in investment banking, moved to the region shortly thereafter, had the good fortune of working with Dubai Inc., if you will, for a period of time, and a very ambitious time, early 2000s. Built both real estate projects, logistics, education, telecommunications, you name it, we were across it. As part of, again, Dubai Inc. and its various governmental and pseudo-governmental arms. Shortly thereafter, I went to work in the oil and gas space, and then for a period of time did that, and then moved into digital infrastructure. In the oil and gas space, did a lot of power generation on site, behind the meter, things like that. Yeah. And then went into the digital infrastructure space, mostly in fiber to the home in the UK. And then shortly thereafter, I was approached by partners who asked me to help them build out a Nordic data center platform. And now I have the good fortune of working with Phoenix, helping them to add AI as a strategy to their core business, which is, of course, Bitcoin mining.
So this is your crowning achievement, or what's next for you? Sounds like you've got the real estate and the tech and the energy.
I have one or two objectives. I'm pretty sure AI is going to be the big focus. I think it is a buzzword. It's a jargon term, if you will. But for me, what it basically says is the digital economy tomorrow, being part of that, being part of the infrastructure component of that, is definitely something that's going to be a legacy item that I would like to be part of building something with and leaving that behind.
Very cool. Thanks. Horace, you started as an investment banker and you're also in AI, but there's something else happening in between, or?
Yeah, we have the same affliction.
No
but
tie.
reformed,
No tie.
but reformed, right? So at DigitalBridge, we're an alternative investment manager, publicly traded on the New York Stock Exchange, DBRG. What differentiates us is that we only focus on digital infrastructure. So data centers, enterprise fiber, residential broadband, satellite, towers, you name it. High performance compute, of course, which falls out of it, which is what powers AI. We have over 100 billion under management. As part of the credit fund, we have over 3 billion. We're a new fund, relatively speaking. But we're looking for, like most investors, great business teams, great business models, and we have the flexibility to match our capital where others, like banks or institutional investors, have a hard time. So we can help with growth capital in a variety of forms.
Okay. You say great business models. So how do you, maybe the next step is resilient business models. How do you tell if something in this tech space is going to stick around more than 3 years? Or?
Well, it in many respects comes down to the stickiness of the customer and or the contract. So much of what we invest in has a contractual basis, although that's not a gating limitation. But understanding your unit economics, understanding the marketplace and what type of operational leverage you have, that ROIC, those are basic ways that we evaluate the investment potential of any deal.
Cool. And Vishal, cutting edge VC, what's your story?
Yes, so I'm the managing partner and founder at PanCosmic Capital. We do early stage investments predominantly in B2B tech enterprise startups, and the primary focus for us are AI plays across the entire stack, application level, algorithmic level, as well as infrastructure plays. And we also tend to focus on finding specific use case, which are vertical specific in healthcare, financial services, retail, and broader energy sector. So previously worked at Goldman, Salesforce, Blumber Capital, investors in companies like Uber at the early stage, MuleSoft Informatica at the early stage, and Breeze and Double Verify as well at Blumber, all of which have been acquired or have gone public for 2.1 all the way up to 8 billion. Uber was an 80 billion IPO. But this is a fascinating space to be in at this stage. And we are looking at, I think, an inflection point where if you look at the way the industrial landscape has shaped up, in every major tech innovation that has captured the focal point of the broader species, it's always the application layer that shoots up, that sprouts up, and then there is development post that at the infrastructure layer as well. And so you can look at the entire space from the point of view of Bitcoin miners. You can look at it from the point of view of folks who are focusing predominantly on AI workloads. And as far as I think the way the industry would shape up, there's going to be a direct convergence and hybrid model that's going to be the de facto way of doing things going forward. And so how would Bitcoin miners look to repurpose or at least partially repurpose their existing data center capacities to accommodate for AI workloads? I think it's going to be a major investment opportunity for people like us as well. Because what you would need to do in case you're doing that and you want to be as much ROI and commercial focus is that you would need to reorient all the way from the application orchestration down to the hardware level, the kind of chips you're looking to buy, the kind of memory bandwidth that you're looking to put together in order to effectively serve these AI workloads. And you can look at it from the point of view of AI-specific vendors as well, where currently, of course, for every watt of electricity, AI compared to Bitcoin mining is 3 to 4 times more lucrative from a revenue point of view, and you generate EBITDA of at least more than 30%, but it's not gonna be an indefinite boom, right? Because at the end of the day, energy costs are rising, models are becoming larger and larger. You've got more than 1 trillion parameters in the last ChatGPT model, and this is increasing tremendously the energy cost for serving an AI query.
Let's go into that a bit more.
This was our fight earlier on, so get ready, everybody.
Even here, you need to think about incremental improvements in infrastructure for the entire stack to be ROI positive.
Let's back it up a bit too, because I know Bashar, you had an interesting model on this, the kind of wedding cake of how to look at this. Because you're right, there is the lens of Bitcoin, and there's the lens of AI, and the lens of probably lots of other stuff that we don't even know about yet. But you had an interesting way to look at it from a more, like a fundamental aspect of what you're actually looking at.
So, I mean, just to shed a little bit of light on it, I think a lot of people make AI sound a lot more complex than it actually is. It's a new way of compute. My colleague on this esteemed panel corrected me by suggesting it was a new way. He's absolutely right. But that new compute really harvests years worth of investments in technology, in sensors, in storage, in things like in connectivity, that now that now come together in what we call AI. And when we unpack what that means, there are several layers to that. At its very base, there's power. Then there's the infrastructure that enables all of that, which includes the buildings, the data centers, the redundant power, the connectivity, all of that stuff that comes into place at the infrastructure layer. And then a layer above that is the compute layer, which is basically, today it's GPUs. Some of us take a view that there's, in the data center world, we talk about something called a single point of failure, which you try to avoid.
Well, yeah,
and we see that the current GPU landscape has perhaps a single point of failure, but the compute layer sits on top of that. And then you have the applications, which is typically where the hyperscalers sit and those people that kind of deliver the products to the end users.
That's the headlines.
Yeah, that's basically the AI stack as we see it. Yeah, a gazillion dollars spent on this, that, the other, power generation, and everything along that stack. So I think the point that we were discussing is that there will be different investors in different layers that are taking on different risks. And at the moment, we see it in a bit more of a monolithic way. We see it as AI, investing in AI. Well, okay, which layer and what risks are you owning and who is your target customer? And I think we're fast approaching that world where we're heading into that more nuanced space.
Yeah, I came from the hedge fund world too, and it's like, just hedge funds, like what? There's arbitrage, there's bias, there's all these other things, and they all have their own this and such. And Well, that actually leads in pretty well to Horace, because you're on the debt side, which is, like you said, you're from a strict wall between the two. And how do you view this from as an investor, working with investors' money, and your investors? How do they view investing in getting into the debt of these various projects?
Sure. Well, from an investment point of view, our LPs are looking for alpha, right? They want a return that's uncorrelated. And so in infrastructure land, we can find that in a variety of different ways. So like I said before, we're trying to serve markets that are not deep and rich and populated by banks and institutional investors. That's the private credit world, right? And because we don't have a regulator looking over our shoulder like a bank does, because we don't have to adhere to the rating agency box like institutional investors do, we have the freedom to work with companies and investors who want to grow and can't find their capital to grow. So we invest from senior secured through preferred. We're not trying to buy and own companies, but we're really trying to structure a solution that fits the business model, that fits the business risks, and that can be a safe return of money to our LPs. And in this regard, we've got a great example. Actually, more than a few examples. We have basically 40 different investments across Fund 1 and Fund 2. Wow. But what is well known is that we were one of the initial investors in CoreWeave's GPU financing. So up until that time, when this is back 2.5 years ago, when Michael and team were looking to transition from Ethereum mining into high-performance compute, they were about a $25 million revenue business. In our inaugural GPU financing, we raised $2.3 billion for them.
What? No bank could do that.
So how would you do that, right? Well, it comes with a great contract. Microsoft was supporting them. NVIDIA hadn't invested in them at that time, but had worked with them from a technological perspective. So they knew, NVIDIA knew, that CoreWeave got the joke and that they could stand up this compute, which ultimately was for OpenAI via Microsoft.
Yeah.
So it's kind of an interesting note. Microsoft at that time, you'd think, well, why wouldn't they have performed the compute directly for OpenAI? Well, they had this little thing called Azure, a pretty popular,
Azure, yeah.
very large, and growing very fast business. The latest numbers, I think Azure was growing 35% year over year as a multi-billion-dollar business with very significant profitability. Microsoft is throwing 120% of their time, their CapEx, their people, behind that cloud business, and for very good reason. But they needed another company to come and stand it up so that OpenAI could, drumroll, launch ChatGPT. So they turned to CoreWeave. And then CoreWeave needed the means to perform that compute to buy those chips. So with Magnetar and Blackstone as our investment partners, we structured a very innovative financing for them, which was actually so well received by the company that a year later we raised $7.3 billion for them. And so CoreWeave today stands as a very profitable, or a very high growth, very strong business model.
I was about to call you out on that.
You look at NOI, you look at EBITDA, that net income thing. Let's not be too concerned about that. Free cash flow, maybe someday in the future.
Earnings before expenses.
But the EV,
Exactly.
the EV of CoreWeave really is quite an amazing story versus, say, 3 years ago. So to my valued colleague to my right, I would just say they made that transition from mining to high-performance compute, and they probably made a pretty darn good decision.
$25 million in revenue to $10 billion debt financing, or $10 billion debt
within
financing.
2 years, right?
2 years.
And never mind the equity that they were able to raise and their enterprise value. I didn't check it this morning, but anybody can look up the stock. It's quite significant, right? At one point in time, they were pushing $100 billion earlier this year. I think now they're in the $60 billion range. And this is just 3 years later. So there is I'd say just taking a big step back to your comment earlier, AI is interesting in that it is a genuinely new form of compute. It exists within the same ecosystem of cloud computing, of transport, of moving bits, but is an entirely new form of compute. It's thinking. That is agentic AI. It's reasoning, okay? And with that, we get the inference that everybody talks about. So the opportunity to become, for an organization at every level to be more efficient and productive is there. I used to think, the question was, how big was your business in order to allocate funds towards AI? Did you have to be a 1,000-person business, a 10,000-person business? I think you actually have to be a business of one to allocate AI resources. And that's really quite the promise.
Amazing. So of your 40 children, that's your favorite, or the one you're talking about today with us. So Vishal, do you have any special, like any projects that you'd like to highlight? Because you've been like in your funds in the venture side. What's the
So
latest and greatest thing?
Talk about a couple of projects which would make, I would say, tremendously alter the ROI for data centers, both for Bitcoin miners as well as AI workloads. But I just wanted to actually build upon certain few things that Horace actually mentioned, which I think just adding a layer of granularity. I think I agree 100% with all things he talked about. But I think if you delve a little deeper into artificial intelligence, and the nuance is to actually know that there are two parts in AI. One is training, the other is inferencing. And so whenever we are trying to think about AI chips which can handle AI workloads, everyone starts thinking about the NVIDIA GPUs out there. Now, you need to dig in a little bit to find out what exactly is the truth. So NVIDIA GPUs have got several parallel cores and a huge VRAM, which is video random access memory. And that's excellent when it comes to training. It is by far the most powerful chip which can handle a tremendous amount of data. But as far as inferencing is concerned, it's not the best chip in the market at all. And I think that's where the big opportunity lies for VC investors like us to fund those chip manufacturers that can be the next big thing in inferencing. And there are already a few players. One is a company called Grok, that a lot of people have heard about. Basically, they have manufacturing chips using global foundries funded by Mubadala. And what they do is sequential processing, focused predominantly on inferencing, where you, instead of having many multiple parallel cores, you've got a very small set of extremely large cores which are specialized for inferencing, significantly speeding up the speed at which queries could be answered. So you no longer would have to wait for 3.5 minutes. If you have a deep research query on ChatGPT, it's going to come back in 25 seconds with 50 to 60% lower carbon footprint. And so we need to discuss these things openly. So there's execution, which is NVIDIA is mastering that, because not a lot of people know about that distinction. And so they enter the data center, you've got distribution channels baked in, and that's what gets sold because they own the chiplet market as well. So that's one certain nuance that I wanted to mention. And as far as companies are concerned, I think for all data center players out there, whether in Bitcoin mining space as well as the AI workload space, there is even more efficiencies that you can realize purely by doing orchestration in a significantly more intelligent manner using artificial intelligence. And so one of the companies we're invested in is called Selden.io. It's a London-based startup. It's a machine learning deployment solution built on top of containers in Kubernetes, where in case you're serving algorithms, and you might be serving as an e-commerce company, for instance, hundreds of different algorithms at the same time in order to make personalized recommendations, and which algorithm is going to be used to make a personalized recommendation in a given ecosystem for a given demographics in a certain country is purely based on one thing and nothing else, which is which algorithm at a given point of time is performing best for a certain demographic, and that is it. And so you don't know what's going to happen. So you have hundreds, sometimes thousands of algorithms, and you have to instantly scale them down. You've got to port algorithms, and that can be made super simple, super easy using AI infrastructure and AI orchestration platforms like Seldom. There's another thing and this obviously improves ROI, it improves efficiency. There's one more thing which is beyond, I would say, the actual chip / orchestration layer where a lot of people think about, and I think one of my panelists on the left mentioned it, networking. You've got chips, you've got servers, but they all play with each other. You don't serve algorithms on one server, you connect them all together through a networking infrastructure of chips and routers. You've got VMs and containers on top of it. And that is also where you can significantly improve performance and lower energy costs. And one of the companies we have is actually a company that's utilizing Sonic, which is an open source network operating system, in order to significantly reduce the cost associated with several networking functions like DDoS assist and firewall assist and load balancing, where generally you have to buy a whole bunch of new routers and switches in order to serve these networking functions. And they've created and crafted a mechanism through which these networking functions could be containerized inside Sonic, and it runs on the existing ASIC inside your existing routers and switches. So you don't need to go to Gigam1, Fortinet, and Cisco. Sorry, on being a little bit of a spoiled sport, big companies done exceptionally well, but the opportunities always lie in disrupting the incumbents. OpenAI did that, and so we invest generally in the people who play a little bit of a spoiled sport, but eventually the entire industry, including the incumbents, benefit a lot.
Let's go back to maybe like Dubai Inc. here, Vishal, because when the Sheikh had his vision, and I was here a few years ago and heard it like when it was 2014. Looking across the future DIFC, this is going to be where everybody's going to come, and then there's of course the Burj Khalifa Mini and Amar and such, and fantastic story. I mean, they have my Instagram's full of it now because it's like this is what Dubai was like back then. He's like, holy moly, and now it's amazing. And he sees little thing, and there's towers around it. And that was like a group or a person's vision, and bring it to the nation and the world. How does this, is there an analogy maybe with what's happening in AI? Because it seems to be, it's crowdsourced, but there's such big players. I mean, how many people can take the transactions that you did? How does like thinking really big affect that? And say you're going to the Nordics and such, like those are huge power installations. Maybe come to Canada, we've got some power too if you want. But what's your view there from that?
I think it's a Cambrian moment for technology in general, and this has a levelizing effect, which I think changes everything. And I know that sounds like a big grandiose statement, but it's important because the difference between this hotel and the one that just opened across the road is experience. This one has 20, 30 years worth of experience. It knows its customer base. It has repeat customers, all of that stuff.
Love it here.
AI has the ability to level that field so that the new guy that comes is operating with tools that bridge that gap in that experience and allow this new participant to compete at that level. And the reason why I bring this into this construct is because Dubai and the UAE in general has the opportunity to play at a very, very, very high level on a field that is absolutely new. It's a new landscape. They've made very big investments in the space. I think it's everyone's pretty much muddling through and trying to figure out what AI means and how it's going to pan out and what the applications are going to be. I think they've made some significant investments in the right parts of the AI stack and in the right geographies. Their investments have not all been, entirely at home. There's been a focus on digital sovereignty, but also on being the first AI native nation. But they've also made investments in other parts of the stack. And I think it'll reap reward over the next 15, 20 years. The things that I think, and I'm more than a little bit biased, but I think they see it as an investment today that in 15 or 20 years will put people 25 or 30 years ahead. And in context of that, the first time I ever heard anybody turn around and say, look, the world used to be about the geographic size of your footprint at the time of the Roman Empire. And then it became about the number of people that lived in your country. And then it became about what is your GDP?
Yep.
And at some future point in time, it will become maybe in a different nomenclature, but how much compute do you have or control in your country? Because that will be a quantifying factor that allows you to truly compete at a level that people that don't have the same amount of compute will have. It's,
Like the new Gini.
Man, that is so
and-
really well said.
What's that?
Sorry?
That's really well said.
Yeah.
Can't
Thank
agree
you.
more.
So I hope that answers your question, but that's kind of the view from the desert, if you will.
Very cool. I think you mentioned like 15, 20 years too, and we were doing a pre-call there, Horace, you had the different terms of the infrastructure, the chips, and the actual contracts. It's all dealing with mismatch. Maybe go through that for the crowd. I thought that was pretty cool because I hadn't even thought about that. It kind of went along with your wedding cake of power and infrastructure and applications.
Well, yeah, if you think about it, right, this is all about being in the technology business. And the technology business is all about, whether it's Moore's Law, Metcalfe's Law, or Jevons Law, advancement and progress, right? Putting more transistors on a chip, right, is one way to express it. Putting more different types of chips against a problem, right? It all comes down to how you utilize electrons, right? How do you utilize power? And what we're really finding is that there's a higher and better use of power, right? That not only can make us more efficient, but also help think for us as well. And with that technology, though, comes risks, right? What is the useful life of some physical asset, right, or some IP? And we expect progress, right? So a data center 2 years ago, which was a very significant size and transaction, would have been a 50 megawatt data center. Literally today, as we all know, you're talking about 2 gigawatt data centers. Why is that, right? And will that 2 gigawatt data center be functionally obsolete in 10 years, in 20 years? Very smart people, engineers, I'm not an engineer, I'm a finance guy, think that they're coming up with the latest and greatest solution today. But next year or 5 years from now, they're going to have another great solution. So that is part of progress. That's what I think is so interesting in this investment game. I think largely we haven't gotten too frothy, although I can point to elements where there's maybe a mismatch of risk. But to your point, James, chips, people are developing a perspective on what is that useful life of a chip. I happen to think it's a little bit more than 5 years. I don't think it's 10 years. People are wondering about the useful life of a data center. What's the useful life of lit fiber? These are all things that that we and the investment community take into consideration that make it really fun. And you wake up every day and you learn hopefully 3 or 4 new things, and once in a while you can apply them.
Love it. Thanks.
Couldn't agree more with that, by the way. This is the most fun space. You said I've
Plus
done
power
a number-
contracts.
Power contracts.
Yeah.
You said I've done a number of different things. This is by far the most fun. Just super interesting. Lots of cerebral people, lots of ideas. Everyone's trying to figure out what the next move is. It's a nice time to be in this space.
So maybe just quickly add on to that. I think it's a super exciting space to be in. And everyone's talking about energy optimization. And I think everyone's in the Bitcoin mining space also looking to make a transition into making, I guess, the data centers more amenable towards handling AI workloads. And it's an expense at the end of the day because Bitcoin mining is done predominantly through ASIC chips like Bitmain. But on the other side, you've got to invest in NVIDIA chips for doing your AI workloads. And so how do you actually marry the two? How do you create hybrid chips? And generally people don't do it, not because it's not viable, simply because people want to sell more chips. But there are opportunities for VCs like us, which eventually will benefit tremendously people at Phoenix Group, tremendously people at DigitalBridge and CoreWeave, because it significantly improves the ROI mechanism. And so just one quick thing, an idea for people to pick up on is to create chips. which have high hash rates, a GPU with a low enough VRAM, but an extremely large cache size. If you do that, VRAM essentially is the main power sucker. That's why energy expenditure for AI inferencing is so high. You reduce the VRAM and you do a larger cache size, faster on SRAM, which is even faster than flash memory. You're creating a chip that is going to work as powerfully for Bitcoin mining and simultaneously for handling AI inferencing workloads at the same time. And anyone can pick up on that idea, maybe NVIDIA, maybe BitchMe. But these are the opportunities for people like us to invest in, and that's what disruption is about. That's what we invest in at PanCosmic.
We went from the clouds to the transistor. I love it. Thanks a lot, guys.